Hello, Warriors. Goodbye, August. Who's ready for the new month? Although we do have a little action with some numbers coming up, especially tomorrow. Michael Bergman, how are you? Michael Weissman, Richard Sabo, nice to see your handle. Alexander Brand, Greg Herbert, welcome. Mohammed Z, welcome to F.A.C.E. That's where we are, right? Jordan Robinson, all you guys. All right. So we had a super moon last night. Anyone look outside?
I did.
Did you?
Yeah.
Wasn't it beautiful?
Don't know. It was cloudy.
Huh? It was cloudy.
It was cloudy.
Yeah, you have to go up to a mountain. So did the dollar bottom on that? We held Blake's level. He has a line at 103 and bouncing back pretty good. What's your feeling? I know, who wants to take big positions in front of the NFP tomorrow, but was that it? I mean, just a little 2-day pop, or could there be more left on this dollar correction? Or some people would say dollar top. Do you feel that way, Ryan, that the recent peak in the dollar, recent low in euro and pound are important lows? They're going to hold for a while?
That's the question. I'm not sure. We really are, still trading light switch markets. As we explained this morning on the flow show as well. You can't. You look at euro dollar. It bounced to 109, but then as soon as it got to a reasonably strong level, 109.40s, it couldn't get through. And it's the same story with a lot of pairs. Kiwi bounced to 60, couldn't get through.
I caught a post by Greg on LinkedIn, and he was saying ABC, only 3 waves, therefore.
Yeah. Aussie's the same thing. Got to 65, stuck its nose above, and couldn't get through. And it's the same in all these pairs. And I know we've been saying it all week, and it may sound boring and whatever, because you want to try and give decent ideas here, but there's times when you just can't settle on something. We could get the PCE data today. Euro could go to 110, or it could go to 107. We're in that sort of scenario, and it's difficult to take a view as much as we want to. I'd love to take a view. I'd love to say, Euro's going to 112 over the next 6 months because of X, Y, Z, but I can't. I can't. So all you can really do is react to the levels. And if you get levels like Aussie dollar you're showing now, gets to 65, it can't get through, well, you try a little short and you see how far it can go. And, if it breaks 65, 10, 20, you're wrong, and you get out.
That's right.
So,
or you give it a little breathing room. I find this interesting. I'll move to Kman on it. Thank you, Ryan. U.S. dollar yen. Good morning, comrade Kman. And I'm not calling you a communist or anything, You're just a comrade. You're a comrade at arms in the battle, on the battlefield. I find it interesting. Yen, U.S. dollar yen, weaker with a firmer dollar. Haven't seen that, I think, for a long time.
I think that's right. I've got the impression that people are starting to take notice of the labor indicators that we had this week in the US for perhaps what yen is concerned. And of course, we've had this over 20 pp setback in the US 10s, and that is always going to affect the dollar yen. We are on support actually in the US 10s. So the next 2 sets of data, I think PCE today and the NFP tomorrow, is going to be very important for US yields. And I was saying on the flow show, so my plan at least is to take all those indicators together until tomorrow NFP, and then see where we end up in the yields, and yen will for sure be a mover on the back of it. It's if this support in the US 10s can give way, and then on a weak report, then I think dollar yen can move back below 145. Yeah, you see, we have horizontal support there.
Yeah, where like this 410 area support from
Early
previous
July.
highs.
Yeah,
I see
early
that.
July, earlier February, March.
All right, everyone take note how Kman looks left. If you haven't learned how to look left, you know.
Yeah, we're not too far left, because otherwise we are going to be comrades for real, right? I mean,
good one, man.
All right.
Well,
so,
you know, I'm more of a libertarian.
Yeah, this is what I'm going to look at to judge where dollar yen is going to go, because if you take it on just yen as a currency,
right?
Again, the Bank of Japan bots were out. They're only talking about doing further normalization, and we don't even know to what extent. January, March, they want to look at the January, March numbers of next year. I mean, so no, it's not the Bank of Japan which is going to drive the yen positively for now, but it can be the rest of the world falling apart around it, and that is going to impact the yen now. If in turn you hold this and the jobs market or the labor market domino does not fall in the US, despite the indicators, orange indicators that we have this week, then I guess your dollar yen is trading back at the prior highs, up in the 147s. Otherwise, it's going to be below 145, I think.
Yeah, so basically it's roulette right now.
Absolutely.
Black or red. So why, you want to play roulette, you go to the casino.
Yeah, I mean, if you have a very good idea about what the end of month flows will be, you can actually trade the next 3 hours or so. But the problem is, and that's what I said yesterday, and we talked about that as well with Blake, is that the latest equity and bond moves have probably trashed all the end of month models, and so at best it's going to be a total mess for come in the next.
Yeah, I have to admit I'm surprised by the strength we had this week. Although once we put in this low down here, I thought we could trade 4,500. But I think
that's your indicator.
A lot of bears are nervous here.
Yeah, that's your indicator holding everything up, huh? On the 25th, 26th, we touched your indicator there, and from then it just rocketed higher. You really should market it.
Yeah, I mean, this was really this new squiggle indicator.
Exactly.
Turned out to be valuable. Yeah. Should pay attention to what happens in our unconscious mind.
If you look at but if you look at what happened in the jobs market, is a cooling down, but it's exactly playing in the Fed's hands. And I reckon the market was expecting for the equity markets to trade a little bit lower, and they got it around their tits again. And I fear there's probably more to come, because if tomorrow your yields are starting to rocket again, then this thing can turn around on a dime.
You know what I'm wondering, and I wonder if there ever will be again, differentiation between asset classes instead of it being all one market. Do you think there'll ever be a day where we have yields dropping and it's not bullish for stocks, and that's why people are going into bonds like it was before the bond market was broken a couple years ago?
When the recession will kick in? When a real
I mean, they're all markets. I don't care about the asset class to different degrees. Bonds bottomed in October, market bottomed in October. So, there's been some pressure, but the bonds haven't made 30-year new yield highs, and they're coming off now. So the market's probably going to love it if we have a bond market rally instead of having a bond market rally, because we might be in the middle of risk off. It just seems, and the dollar, I mean, they're all moving together, aren't they?
Yes, they are. Because
it's one market. It's one market.
Because we're firmly trading soft landing. Everybody had to push back on a recession, and we are now trading firmly a soft landing. And for as long as that continues, well, I mean, who are we to stand in front of it? But for us, it's going to be case to find the turn, right? When things really, when bad will be bad. Let's put it up.
Yeah, because there's no differentiation. I did pick up an interesting tidbit in gold. You know, a lot of banks and hedge funds borrow to go short, and the rate for borrowing to put on your short positions doubled in about a week. So the last time that happened, I think, was late September. Bob Coleman sent me that, and you know, there've been some other things happening in like not enough SLV shares to short. There's some things going on there. I actually, though, am, you know, was shorting silver into the full moon, and it's coming off. I know one day a trend doesn't make, but you know what? They all start that way.
Yeah.
With one day. So we'll see. I just think there's one more trip down in these metals, and I promise if we get down here and we get down here, I promise that I'll never talk the short side of precious metals for the next 2 years. I won't short them anymore.
Give me the punchline.
That is it,
guys. Timestamp it.
I'm gonna save this one. Yep, screenshot everything. You got it.
All right, I'll never trade for 2 years. I'll only buy breaks. Once we get down there.
Let's
I'm going to become just like,
definitely timestamp that one, Kman.
Yeah, Stelios. I'm going to join Stelios in being a perma bull in precious metals for 2 years. Anyway, we'll see. I'll probably go bankrupt.
Dale, good morning, and good morning,
hey, bro.
Ryan and Kman. I gotta say, you've been talking about this full moon a lot. So what does it mean, aside from, I get a couple of teenagers that run by my house and they give me the full moon, periodically from time to time. But what full moon are you talking about, and how does it affect what we're doing?
Okay, well, there are a lot of people. Chris Carolyn is one guy who's pretty famous for looking at lunar cycles, and then he also integrated the tides, which the moon has an effect on. It's things in the unseen world, like cycles, Blake. Everyone has one. Women have them. We have them.
Yeah, I met my wife personally. Well, she has a few cycles going on.
Yeah. Anyway, so it's a cycle, and at times they could lead to, if markets are rallying into it, at times it could mark an inflection point, or if they're declining into them. So I just have seen a lot of turns on full moons and on eclipses, not to be skeptical about it. You almost feel the vibe going into it. So we'll see. Maybe it's marking some highs and lows here. You only know that in the rearview mirror, though.
Yeah.
So,
hey,
and it's romantic, man.
You're a werewolf. You are a romantic. Dale is probably one of the most sensitive romantics I've met.
You're gonna make me cry now, man.
Seriously. Hey, real quick, Tulin had asked about the silver chart. Can you go back to the silver chart? And yeah.
There it is. So what's he asking?
He wanted to ask about, he was asking, could you go back to the silver chart? Maybe we wanted you to finish your thoughts on silver and the full moon.
Okay, well, maybe a full moon high, right? Okay. And silver, still trapped in this. I'm out over these highs, a little bit over these highs, but I'm looking for one more wash. I still have that harmonic pattern in my head, and then I drew this speed line, and it's right around where the harmonic would, that you showed a few weeks ago, would finish. And I don't like the way the shares are acting. They're, look at that move in silver, and then look at the juniors, weaker, right? Look at that. look at AG, weaker. And some of the other juniors are on the verge of making new, I don't know, 52-week lows or so. See that? You know they're going to take those. So what I want to see is a day when silver is down hard and these things are unchanged or holding up. And it's the opposite right now. So these tell me that there could be one more washout in the metals, even the golds. Here's GDX, there's the blue chips, right? So we had a nice rally in gold to, you know, we could be near resistance, and I'm looking for one more decline in the GDX down to, because 27 is held a couple times, see here,
Yeah.
and of course we'd hold here, but I think that we could get the 78.6 back. And it's actually, the big picture on the monthly is a huge triangle. Okay, so I'm looking for it to, you know, trade 78.6 and eventually break out to the upside over this triangle. And it's a big move. You know, it could take you to 60 or 70 on the GDX. But
So,
I think, you know,
can I show you something with gold? I didn't I didn't realize this till last night. And
Yeah,
it
go
wasn't
ahead.
it was Chris Weston, because I was doing the trade off with him. It's a nice thing about being like, I'll just you know, mention this as I you know should. You know, one of the things being in a community like ForexAnalytix, for example, is that you get a lot of ideas from, you know, people in your community. Like sometimes you know, Ryan or Kman or, you know, or Gavin or Mike B, you know, different people see things that you didn't see in the markets as well. And
right.
I was doing the trade-off show, even though that was an actual show with Chris Weston. He was he brought up gold last night, and he said, you know, this is one of his setups. And I'm like, yeah. And I didn't notice that there's actually a descending trend line that comes in right at where we're at. And you can see it's descending trend line, 618 retracement, and also previous support. I had the previous support in the 618 up there because you can see like the, you know, let me grab a drawing tool really quick.
And I think, Blake, this would be predicated upon there's another wave up in the dollar. If I'm wrong and the dollar's peaked and they're going to trash it, you're going to get a breakout in gold. And
well, that's the thing. It's like you look at where gold's at, and it's actually at a perfect inflection point going into today.
Yeah.
You know, Kman's been harping on it literally all week, and I think it's a really important factor that we are at the end of month. So obviously there's a lot of flows going through today, specifically. You got PCE, which is the last inflation read that the market gets, you know, of the month. It's everybody's expecting a little hotter data, you know, because of all the inputs that people have seen, the economists have seen. They could pretty much come to the conclusion, excuse me, that data should be a little bit hotter. So we've got that. Then you got people positioning themselves for NFP tomorrow. You know, so I think I was just going to say, I think that you know, we have gold that could really, you know, launch here or really reverse. You know, it's very pivotal. Yes,
China's just lowered mortgage rates on on some of its mortgage stuff, and has tinkered around with its home loans, housing loans. Was expected, has been touted for the last few days, but they finally seem to have done it.
They think that's going to stimulate the Chinese economy, which, you know, look at the Aussie. Immediate response from the Aussie is getting a lift here. And here, you know, here's the thing. Thanks, Ryan. Do you believe it, and do you trade into it? You know what I mean? I mean, it's,
you know, back to gold, just one last thing, the thing that, you know, that's why, you know, it does help to, you know, keep an open mind and learn from other people while you're trading. I mean, that's what happens in the room. And that happens when I interview people. I learn things, and people I follow on Twitter. And the tidbit about it costing twice as much to hypothecate a short position in gold, I think is a big deal. because that's how the banks keep a lid on this stuff. They just borrow and hypothecate short positions, and there must be big demand to do it if it costs twice as much now. Big spike in it. So
I was actually I need to go back and you interview Luke Groman, and he was on yesterday on a podcast, and I was listening to it while I was doing analysis. Whenever I do like evening analysis and I'm putting together all the stuff for like all the different currencies, I'm usually out typing all this this analysis throughout the evening, and I'll listen to like different macro economists just to kind of get their viewpoints. And Luke actually had he had like the end game being that about BRICS, and I have to go back and listen about how he thinks that the BRICS are going to use gold and crude to really get away from the dollar. Yeah, it's an interesting. I have to go back and re-listen to it because I thought it was like, wow, how about if
because didn't you just have a guy on who said BRICS are more bark than bite?
Yeah, Deer Point Macro. And I mean, it's obviously different points of views, and
right.
Who knows what the eventual outcome will be. But I do remember this, and Ryan came in. I know you guys are pretty FX centric. Dale, I don't know if you were so much around the GFC or what you were trading at that time in 2006, 2005.
I don't remember either.
Well, I remember that the world was very anti-dollar at that point.
Oh, okay.
And especially Russia and the Middle East.
Oh, people wanted to get paid in euros.
And Giselle wanted to get paid in euros. Everybody was anti-dollar, and everybody, like I said, everybody was anti-dollar. And what happened is, the GFC happened, and there was a big rush for dollars. So you have people on one hand like the Brent Johnsons of the world with the dollar milkshake theory, and then you have like the Luke Gromans that are like the dollar is eventually going to be diversified away from, but the timing is always where is it? But the fact is, and I think we all can agree, we're all probably on the cusp of from a business cycle, we're probably at the cusp of a situation where we're keeping rates high, and the economy and the global economy is probably going to tip into some sort of recession, whether it's the end of this year or going into next year, and there might be a rush for dollars as a result. And so but
it held your level.
Yeah, it held 102.80 or 103. The breakout point. Now just look where the dollar just stopped at too, underside of the trend line too. So you can see we're very much, I did that on accident. That was my fault. We are very much boxed in right now. And this is your sandbox in the dollar, and where the breakout points are. That's the great thing about, technical analysis. We know exactly where the breakout points are in the dollar index. It is below 102.80 right here, or above 103.60. By the way, if you don't know why 103.60 is so big, just look left. And like Kman said, don't look too far left, because then what'd you say, Kman? Dale and you would be. Oh yeah, we would be
real comrades.
Real comrades. That's right.
We'd have to move to China or Russia to trade.
There you go. Anyway, hey guys, real quick question. We had economic data come out of Europe overnight, and I saw, well, first of all, the euro was getting absolutely smashed overnight. But I was looking at the data, and we had Eurozone's CPI come in a little hotter year over year. What gives? I mean, is it the German unemployment that just cratered the euro, or what was there some comments?
You go or I go, Ryan?
No, you go, mate. You go, mate.
I go. Yeah, because we had a bit of a discussion about all this on the flow show today.
Yeah.
No, I reckon it's the data outside of the inflation which have really put pressure on the euro, and a couple of warnings, despite what inflation does, is that the economic indicator Schnabel was out this morning as well, saying cautious about the economy, and I think that's what did most of it. But then you look at euro crosses as well, and there may have been some end of month in there as well. But I'm and I've said it here as well. I'm starting to look more to other data than really inflation data, real growth data, because you can stay higher for longer, but if it's the same elsewhere, your interest rate differentials will still remain the same, right? So I'm not pushing inflation back to the background, but because it will impact the length of for how long they keep the interest rates where they are, or even rise more. But all the other countries are relatively at the same level of interest rates than the ECB or higher. So I'm rather looking at the other data now, and I think the market may have reacted a bit in the same way now. And that's why I also think that regardless what's happening on inflation, look at those 3-4 days in a row in the US data as well, because the dollar will probably pick a direction regardless of inflation tomorrow.
Yeah, right. Exactly. Okay. Thank you, Kman, for the explanation. And, because, when I get up in the morning, and I know Dale does the same thing, it's like, I'm trying to, drink a cup of coffee, get the sleep out of my eyes. It's 4 o'clock in the morning, 3:45, and I'm looking around trying to figure out what the hell just happened overnight. And, when the euro just comes down like that, yet the data was a little bit of, not so bad. I wondered. So thank you very much. We got about 3 minutes before data comes out, and it is the PCE data. I do think it can be a market mover today, especially the dollar, end of month. We've got a lot of stuff happening. So I'm going to just go over to the calendar here. I'm going to launch the data flash that comes with ForexAnalytix. I want to mention also, this is in the ForexAnalytix chat room. Sorry, I can't even speak this morning. ADS or Adam, he was asking about, is this a Gartley pattern? And, a few of us were answering, and I'm going to get to that chart and give them my view of that here in a bit. But this is an example of what the ForexAnalytix chat room looks like, just so you guys can all see. We have the Flowonomics room. This is the macro chat room, news and research room. Trades room where myself and other traders will post. Kman's posted a lot of his trades. Ryan posts his trades there. The S&P and indices room. This is where everybody's talking about what's happening in the SPOOs and the DAX and everything else. Then we have a Spanish chat room right here. So make sure you guys check out the ForexAnalytix chat room. That's where it all happens. Let me move that.
It's like a university with all the different rooms, like different
it's just
subjects.
Yeah, we got I got some comments from a young man, Chris, who's a trader here locally yesterday, and I met him in person, and he was just saying, man, this is great, and I learned so much. And he was, we were texting about it yesterday. Really nice comments from Chris. But you get a lot of traders that are just looking to a lot of people are just lurking around in the background, trying to take it all in. So it's a really nice,
pretty cool.
Okay, here's the S&P. Yeah, there's the, let me put in it's going to be a 15-minute chart here on yields. Over here on the left, I'm gonna put in the dollar, just so I do this with you guys, just to get instant reaction of what the dollar is doing. S&P yields, just because that's all I can fit on one screen. But obviously, here on my computer, I've got more screens so I can see everything. But for us, just so we can see instant reaction, you'll see it here. So we got jobless claims, PCE data. And then remember, we have NFP tomorrow, so and a month, so it's a lot of things happening. Ryan, any last comments here before the data comes out?
No, just keep an eye. Obviously, we're looking at higher numbers there for both the PCE and the core PCE. So look for the variation. If it's soft, if it's under last month or less than 3.3% PCE, then we're going to see the market yields coming down, dollar coming down. Same for the core. But watch for the divergence. You could see the headline coming down and the core going up.
Okay, Kman, got just a few seconds. Any last minute words here?
No, the same thing as Ryan. Really, not really. No, nothing really special.
Just watching the light switch, guys.
Exactly.
All right,
like
guys, here
that,
we go.
Ryan.
We got data coming out in just a few seconds. We got the 10-year S&P in the middle, dollar index to the left. This is the yields to the right. Let's see that data. And yell it out if you guys see it before I do.
In line, 3.3, 4.2.
4.2, yeah. Look at yields are ripping. Dollars firming up here. Yeah, PCE in line. Initial jobless claims worse than expected.
Dollar fading.
Not by much though.
Better than expected.
Yeah, it's,
of course, the S&P's like
went down. It's strong. It's strong data. Incomes little softer than expected, 0.2. Consumption spending up 0.8 versus 0.7 expected. So more soft landing numbers.
And this is the, and you know, I was talking to a bunch of traders yesterday about like the S&P and its rally, and we were having this discussion in our chat room all day yesterday. And you know, this is a positioning, you know, that was a positioning rally. I call it the Michael Burry rally squeeze. You know, rally.
Oh, yeah, because it was publicized. He was in a lot of puts.
Yeah,
right?
I mean, I had people texting me like literally like 2 weeks ago or a week and a half ago. Oh my God, it was short. Oh my God, the market's gonna, you know, to take.
I just watched that movie again. It was great.
It is a great movie, but you know, and the guy, you know, I mean, look, he was wrong for a long time before he was right about the real estate market, and probably the same thing will be it'll probably be the same case in equities. He'll probably end up being right. Just, you know, timing's not perfect, right? Yeah, I mean, and I think that the market got really excited about being short in a low volatility environment. You got vol that we just closed a gap yesterday in VIX. We're back at support, you know, and I think the market was primed for a squeeze. So here we are, squeezing higher, and you know, it's end of month. And look at the dollar yen just hit new lows, and dollar's kind of getting pushed around here. So just heads up. And I want to say thank you, Ryan. Thank you, Kman, for being here today, and thanks for keeping everybody straight during the flow show. If you guys haven't listened to the flow show, make sure you guys listen here every day. In European trade, if you're up during those hours, which I happen to be asleep, and same with Dale, but if you are awake and trading, make sure you're listening to the flow show with Ryan and Kman every day. And Dale, I think you probably have an interview, so I'm gonna pass it over to you.
No, I don't. Nope.
Oh, you know, I thought James somebody.
His dog is passing away.
Oh,
it's going through that. Sent me pictures.
Anyway, that is not fun. That is not fun. I remember that happening to you at one point. As we met initially, and that happened to me just over a couple of years ago. That's no fun. All right, well, hey, real quick, since we got a few minutes, I'm not sure if Ryan and Kman are still here, and I don't know if Steve.
Yeah, we're still here.
Ryan, you know, and both of you guys are here. All right, as we go into month end, and we don't have to stay here, you know, very much longer. I just want to say, is there anything else that you that's on your mind, front and center, before we you know, shut her down for the day?
Yeah, well, Austin's just asked a question, raised a point, saying we were discussing how difficult it is to have long-term views. He's looking at the CPI numbers for next month, so on and so forth. But yeah, it's what we're seeing in the Eurozone is a bit strange. You know, we're seeing growth coming down, but inflation maybe getting more sticky and going up. And you're going to need to be watching this, because these are the sorts of divergences you're going to be playing into the end of this year, early next year. You know, you've got to look at the different central banks. The ECB will be more focused on inflation than they will on growth. So if the economy is falling but inflation's going up, then they'll be more hawkish on the inflation front, whereas someone like the Fed will be more, you know, looking at the growth side of things more than inflation. So they may react first if their economy is doing bad. So Euro's down, as Kay was talking about, on the growth story, but you've got to look at the inflation story. You've got to know what each central bank, what's important to each central bank going into that part of the year, because that's going to bring where you're going to trade which currency, and if the market gets overly extreme one way or another.
Well, that makes a lot of sense. So, and it's going to be all about differentials, as Kman's been saying, and how central banks are trying to position themselves and what their fight actually is. And correct me if I'm wrong, you guys. The ECB has one mandate, which is inflation, right?
Price stability, yeah.
Well, I thought their mandate is really just inflation. I mean, I may be wrong.
The mandate is price stability, and within that, keeping inflation close but below 2%.
Okay. All right. Where the Fed has a dual mandate, right?
Which is
employment and inflation
and price stability. Yeah, it's price stability. It's not an inflation target. It's price stability as well. None of them have a mandate on growth, which is pretty strange, because obviously it does play a big factor in what they do. But none of them have a mandate on growth. I don't think. It's all about price stability and this, that, and the other.
Well, interesting. Okay. Kman, any last minute thoughts before we wrap up the session here?
No, I honestly, absolutely not. I have this bit of a wedge in the euro dollar, and we're just back inside. I've got a little slightly different. I don't know, man. It's end of month, and really, as I said a couple of times already, I'm really going to take all the data all together and then see whether those September seasonals have a chance. And something tells me they may not this time, but we're on two important levels just to pick a side right now. I think we've shown those US 10s on support. We're in between on the dollar yen. It's really tough to really pick a side. If you look at dollar CAD, we are just above 135. Is it going to hold? Yes or no? And then you have those antipodians all over there as well. It's really tomorrow. I think is going to be a bit of a decider.
Yeah. It's all about the NFP. So with that being said, Dale, any last minute thoughts before we wrap things up?
I'm looking at my Dixie chart right now, and I don't know if it's going to happen, but I'm a buyer at 102, it's 50%, and I have some other confluence there. So just a simple GAN thing. I'm looking to buy 50% correction and off this dollar rally we've had.
Wow, you think we might get there?
No, I'm not shorting it, so that tells me that I don't think it enough. But I'm just saying, just like you plan ahead, that's not the trade. The trade is not to short it at 102. The trade is if it gets to 102, I'm a buyer.
Got it.
But I used to do that all the time, Blake. I go, well, Dale, you want to buy it down there. Why don't you just short it, ride it down, look at all the extra firepower you'll have to buy it at 102. But, then what we imagine doesn't happen, and it's the wrong side of the market for me.
Yeah, I mean, that's what I do pretty much. Well, that's what I do all the time is I imagine what I think is going to happen. It doesn't mean it's going to happen. But if it plays into my thinking, then I tend to be more confident about taking that trade. Like if I say, well, the dollar index, if it gets to 102, I'm a buyer. Doesn't mean it's going to get to 102, but if it does and it gets there and I'm like, okay, now I have to assess, I'm buying it here. Does the macro landscape, the data, is it good enough, or is it valid enough for me to take that position now? So,
and that'll take the DSI bulls down to a more reasonable level if that happens. But there's a difference between sentiment and how people are positioned. I think Jim Walsh or someone made the comment that they didn't think the dollar would break too hard because of the way the market's already positioned, very bearish a dollar. And you kept bringing that up about the euro, that longs aren't giving up. So, this will add
not
to
yet,
it.
I don't think.
Yeah.
Not yet. Hey,
Yeah.
one last thing, and I'll let
102.
you guys. I think we can wrap it up. VIX.
Good show.
Speaking of, yeah, it's been a great show. DSI. You were speaking about daily sentiment index.
Yeah.
The VIX is a single digit midget right now, which is
Wow.
at 9. And when you're that extreme bearish sentiment, usually you get a turn. So what that would mean is that you got everybody on one side of the boat that's extremely bearish.
Again.
You can get a whip around, and you can see that equity markets are coming off their highs.
They are.
They just right into this resistance zone, and they're coming off their highs right now. So you start to see volatility spike, and it's obviously going to weigh in.
This could still be a failing rally off the highs at 46.10.
I think it is, but that's just my gut instinct rather than stepping in front of it. But I think that I think we are going to still create a lower high in equities going into this next month. So anyway,
from your lips, bro.
Hey, well, just from my gut, which you gotta listen to your gut when it's outsized like mine is.
Welcome to the club. But I'm going to join Victani's. You probably don't remember that one.
I don't.
If that's your grandmother.
I don't.
About that one.
No.
Anyway,
I only got jazzercise. That's as far as I go.
All right. Anyway, Kman, comrade, and
Comrade.
And Ryan, Ryan.
Cheers, Dale.
And let's see, what could I have for Blake? Blasphemous Blake, great show.
Thanks, guys.
Anyway, always love hanging out with you guys and looking forward. Be here tomorrow, everyone. Trade that NFP live with us. Let's promote being here for the news tomorrow. Okay.
Sounds great.
All right, guys. Don't just count your pips, count your blessings. Adios. See everyone for the no frickin' problem number tomorrow.
All right. See you then.
Adios.